Hello, I'm Jared Nelson from the Investing Channel, and welcome to Pros and Cons, the show where we take you through the risks and opportunities behind the trending ideas in the market. Over the past few months, we have talked about exciting equity sectors, volatile macro instruments, and compelling country bets like China. What we haven't touched upon is funds. Some think that funds are boring. Others dislike funds because they generate low returns, as funds usually hold a diversified portfolio. Well, not all funds are like that. Some funds can offer both a good story and powerful returns. In 2021, few other funds can match the reputation of ARK. Its hyper-growth orientation makes ARK funds the destination for growth investors. The suite of actively managed ARK funds was started not so long ago, in 2014, by Wall Street veteran Cathie Wood. She launched, with money seeded from Bill Wong of Archegos, 4 exchange-traded funds focusing on dynamic growth sectors. During the early phase, ARK funds grew modestly. Then in 2020, ARK ETFs saw its assets under management swell. The company now manages more than $40 billion across 6 funds. The original funds are ARK Innovation, ARK Autonomous Tech and Robotic, ARK Next Generation Internet, and ARK Genomic Revolution. Recently, the fund launched ARK FinTech Innovation and ARK Space Exploration and Innovation. By far, the fund with the largest asset under management is ARK Innovation. At the end of May, its assets totaled $21 billion, a sum that comprises almost half of the entire ARK assets. Let's take a quick look at performance. In 2015, ARK Innovation was trading at around $15 to $20 per share. Last week, the fund closed above $120. That's about 500% price appreciation in 6 years. Not bad for a diversified fund. Even more impressive, the fund rose 300% in the 9 months from the pandemic lows. This beats the market by a wide margin. What does the fund actually hold to create such a wide lead over the S&P? On its website, ARK says it invests solely in companies that are disruptive, innovative. It bets on 35 to 55 firms. For example, the largest holdings in ARK Innovation are Tesla, which has an 11% weighting, Square, 6.5%, and Teladoc at 6.3%. Almost 35% of stocks are held in e-commerce, cloud computing, and digital media sectors. The question for many listeners is this: should you invest in ARK funds after such a good run? There are 2 sides to this argument. Yes, if you believe growth sectors will continue to lead the general market. Remember, 2020 saw the biggest return differential between growth and value stocks in 200 years. Value stocks underperformed so badly that some value-oriented funds had to shut down. Another point worth noting is that the U.S. economy offers the largest number of innovative, high-tech, high-growth companies in the world. The growth market here is wide and deep enough to invest in. Previously, growth was confined to small or mid-cap stocks. No longer. Now the U.S. has growth stocks that are worth tens of billions. Another point worth mentioning is that the U.S. tech sector is undergoing a self-reinforcing cycle. Wealth accrued in the previous boom is now being recycled into newer sectors. A prime example is Elon Musk, from PayPal to Tesla. And Tesla is leading the market into electric vehicles, next-gen batteries, autonomous technology, robotics, etc. And Amazon is powering into space technology. Therefore, ARK is primed to benefit from this cycle. The fund house is even wedging into the booming crypto market by applying for an ARK Bitcoin ETF. Now let's talk about the other side of the argument. The first question is, are ARK funds a one-trick pony, so to speak? Well, ARK has a few funds catering to different market segmentations, from fintech to biotech. But it is clear that these companies are new and growth-oriented. Because of this, most ARK funds tend to swing together. For example, most ARK ETFs peak together in February. Secondly, can you withstand the volatility of the fund? In newer sectors, evaluating the companies is harder because of a lack of profits. In the classic Buffett's.com question, how do you value stocks that have never made any money? Growth stocks are hugely volatile. Price targets can be hit or miss. Large corrections are normal. Thirdly, are we too late in the cycle? Yes and no. Yes, because we have already missed out on the best part of growth. You are not going to gain 30-fold from buying at current price levels. The current upswing is quite aged. No, we're not too late because the fastest returns are stacked at the tail end of the bull market. Parabolic uptrends tend to generate profits quickly. In conclusion, it is fair to say that ARK funds have benefited massively from the rotation into growth stocks in 2020. After a correction, momentum is picking up to the upside again. As the equity bull market stays intact, growth stocks may continue to confound expectations. Having some exposure to these sectors is therefore prudent. Just don't overstay the bull market. Set stops, mentally at the minimum, and prepare to exit when the run is over. That's all we have time for this week. Make sure you do your own due diligence before making any investment decisions.